are in the QBO gym, and the QBO gym is a place where we have numerous hands-on exercises that simulate real-life scenarios that you may encounter as a bookkeeper. Each month covers a variety of new topics and scenarios, and to make it a little bit easier for you, we break it down into 4 different sections. So if you're looking to work on your bookkeeping skills, this is the place for you. And if you want to do a deep dive and do some of these on your own, be sure to join our free 5-day bookkeeping challenge. All you need to do is click on the link in the description. But let's get into today's exercise, which is being pulled from our May Year 1 Strength Training section, where we really focus on journal entries. At the top here is an animated video to give you a synopsis of what is going on in Craig's world this month. He is our fictitious business owner. Further down is an interactive pre-assessment quiz that relates to the video up above. Below that are the exercises in this section. And at the bottom here, after you have gone through all of the exercises and completed them, you will unlock some sample marketing posts that you can use on your LinkedIn to share with everybody what you have learned so far. So let's get into today's exercise where we're going to practice recording a depreciation journal entry. Go ahead and click on the link to have the exercise pulled up for you. I have it here on the right side of my screen, so let's read through our scenario. Craig's CPA, Pam, sent you a note asking you to record last year's depreciation on his truck for $1,200. As a bookkeeper, it is typically not your job to calculate depreciation. It is, however, your job to enter the numbers in the books that you received from your client's accountant. So let's see how to do that. You will need to be in the sample company to do this exercise. Now, if you're not sure how to get into the sample company or get your own free QBOA account, be sure to click on the link in the description. I have the sample company pulled up here on the left side of my screen. This is the dashboard and what it will look like when you sign in. So let's go ahead and get started with today's exercise. Now, a note here about depreciation. In accounting terms, depreciation does not affect the resale value of the truck. In other words, it doesn't mean that the truck is worth $1,200 less. Rather, the depreciation simply reduces the book value of the truck to reflect the use and wear and tear of the truck over time. So let's go ahead and get started with that journal entry. We're going to click on the plus new button and then select journal entry. That is over here on the left side of the screen. Click that plus new button and then under other, select journal entry. Now, this journal entry is used to adjust the book value for last year, which will be used on the tax return. For this reason, the date of the journal entry will be the last day of last year. So in the journal date field, go ahead and select December 31st of last year. And just know that whenever you're watching this video and doing this exercise, your date may be a little bit different. But for me, my date would be December 31st of 2023. Now let's go ahead and add a description for this journal entry so it's easily understood what this is for. While it would be nice to be more descriptive, characters are limited in the journal number field, despite it being a gigantic field right here. There's only so many characters that we can use. So in the journal number field, we're going to type the last 2 digits of last year and then truck depreciation. Again, your year may be different depending on when you are doing this. For me, it would be 23 truck depreciation. I don't think I spelled that right. Depreciation. There we go. And the reason that we name it here in this journal number field rather than just giving it a number is if you are going and looking at a list of journal entries, rather than having to click into each one, if you have a description here in that journal number field, you would be able to know exactly what it is for without having to click into each one. So just a suggestion as you're doing your bookkeeping, something to keep in mind and to do to make it a little bit easier for you if you ever have to refer back to it. Now let's go ahead and fill out that journal entry. You will need to select the depreciation account, but as you go through the list, you will see there are 3 depreciation accounts showing. So which one is the correct one? Well, the first one is the depreciation expense account, and this is quote unquote used, is the quote unquote used amount that will show on the profit and loss report and the one that we want. Now, the other two depreciation accounts reduce the value of their corresponding assets. So, in a real life scenario, naming the expense account differently to distinguish it from the other two accounts would help make it things clearer. And an asset could be something like a truck. So, let's go ahead and fill this out. On the first line in the account field, let's go ahead and select depreciation. It will be an other expense account. So if you click into that account there, you can either start scrolling down until you find the other expense accounts, which if I do that, it will be down, I believe, towards the bottom. Here it is. It's almost at the very bottom of the list. Here you can see it's an other expense type of account. Go ahead and click on it once you find it. In the debits field, we want to type 1200. So go ahead and click into that field, type 1200. Now, to complete the remainder of the journal entry, we're going to be using the depreciation sub-account of the truck, which I mentioned earlier. So this will reduce the value of the truck asset specifically. So on that second line in the account field, we're going to select depreciation. And again, this is a sub-account of truck. So if you click into it and you click the down arrow, you can start scrolling for it. I'm actually this time going to type in depreciation. And for this one, here it is, that sub account of truck. This is the one that I want. And after selecting the account on that second line, QBO will automatically fill in the balancing amount in the credits field, which is what needs to happen because debits and credits always have to equal each other. Even if you have multiple lines and things are broken down, the debits total has to equal the credits total in order for the journal entry to be filled out correctly. So this is it. This is all that we needed to do for this journal entry. So we're going to click on the down arrow next to Save and New and then select Save and Close. That is on the bottom right corner of the screen. Click that down arrow, select Save and Close. And there you go. You have now created the journal entry for depreciation. Now, if you like this exercise and you'd like to do more like it, be sure to join our free 5-day bookkeeping challenge. All you need to do is click on the link in the description. We move through the strength training section, again focusing on those journal entries with our next exercise where we practice recording an amortization journal entry. And I will see you in the next video.